This is Luke Broyles with 21st Century Finance, and today I want to make a video basically explaining Bitcoin for the average person. I know that it will not be perfect, but I want to attempt to make the best explanatory video for Bitcoin that I possibly can. Before we get going, I have three caveats and disclaimers I want to give here up front. First and foremost, I encourage you to take these thoughts and points and really think about them before you dismiss, laugh, or ignore them, because I thought Bitcoin was pointless for years. I heard these arguments, I didn't really understand them, and that's mainly because I didn't take time to understand them, because I thought they sounded so absurd they couldn't possibly be true. But I encourage you to watch this video all the way through, perhaps rewatch it, or look up other people's opinions on the subject and come to your own conclusions. But I really encourage you to think about these things, because it truly could be one of the most important ideas of your lifetime, and we'll get to that more in just a moment. The second thing I want to say is that Bitcoin is not about getting rich. A lot of people think it is, and that it's just trying to get rich quick and make a quick buck, and that's mainly because of its volatility, which will be addressed in this video. But the different perspective I would like to come at it from for you in this video is that it's not about getting rich, but instead it's about keeping up with the increasing rate of technological change. All of us, especially in the Western world, are very aware of how quickly technology is changing, updating, and upgrading, and the points in this video are really going to emphasize how much that is only going to continue to speed up. And Bitcoin is about staying on top of that rate of change, and it's one of the most important, if not the most important thing to understand when it comes to the rest of the 21st century and the rate of technological change. So this disparity here, I really want to be in the back of your mind during the duration of this video. And the third thing here, really quickly, for those that are more technically savvy, I would just want to clarify, this is not going to be discussing how Bitcoin works so much. I'm not going to get into all the jargon and computer science stuff that would go over most people's heads. I'm just going to stick to the why Bitcoin matters and why it's important for the average person, because my goal is for the majority of people watching this video who are hopefully brand new to Bitcoin, that they I don't want to overwhelm them, and I don't want to confuse them. So we're going to keep it extremely simple for the average person, and we're going to keep it mainly on metaphors and parallels and everything of that sort. We're not going to focus on getting rich or how much money can you make, but instead we're going to focus on technology, and I encourage you to think of these things sincerely. So without further ado, let's get right to it. The first thing that needs to be understood here is that the baseline for humanity is poverty. You know, if you go back to the very beginnings of human civilization, everyone was poor. You know, no one had consistent heat, had consistent housing or food or anything of that sort. If you had a minor disease, it was basically a death sentence of sorts. And as a function of time, technology has made everything cheaper due to human ingenuity and free markets and the ability to innovate and discover new forms of energy and technology. We've come up with an incredible amount of inventions that have made our lives easier and more prosperous for lower and lower costs. You know, for example, light only gets cheaper and cheaper when you go from fire, the first kind of light that we were able to manipulate, to then going to the candle and to the lamp, and then from there to the primitive light bulbs, and now we have advanced light bulbs, and this will only continue to get better. Light bulbs and our channeling of light will only get more and more efficient. Same thing with energy, same thing with housing, heat, food, water, etc. I should not have to elaborate on this too much. Hopefully you are intelligent enough to observe it in your own life, and I'm sure you are, just how rapidly our lives are able to improve in terms of prosperity and economic survival, because and the point is, this is all because of technology, and that technology as a force makes everything cheaper. Basically, you can think of the average person's life today as being far more prosperous than, say, even a billionaire's 100 or 150 years ago. You know, you have a wide variety of luxuries that they couldn't have even imagined. You have the internet, you have air conditioning, you have more variety of food than all these rich people of the previous generations had. And basically what this comes down to is that the most important factor for determining your prosperity of life is not your nation of origin. It's not even your family or your religion or your belief system that you come from. And obviously these things are very, very important. But the number one determining factor of how prosperous your life is going to be and how long you're going to live is actually what century are you born in? What era are you born in? What is the degree of technology in your society? That is basically the driving force of human history. You can think of human history as basically trending from complete and universal poverty to complete and universal prosperity. Humans don't change, humans' brokenness and benefits don't change. It's only the technology that changes. And when we can think of poverty going down, we can also think of prices going down, because the prosperity it takes to climb out of poverty, it becomes less and less expensive over time as technology becomes better. And this has been one of the most incredible trends of the last century or couple centuries here. It's just the rate of destruction of poverty. This is objectively a wonderful thing, and this should make everyone extremely happy and extremely optimistic. A mere 200 years ago, at the turn of the 19th century, 4 out of 5 people, 80% of the human population that was currently alive at that time, was in poverty. And today, it's barely 10% here. It is just a cliff, a nosedive of poverty over the last 200 years. And this is one of the horrible things where people fear overpopulation and everything like that. And yes, these are problems, but the reality is the global population has boomed in this time, and yet poverty has declined. Even though we use so much more energy, we use so many more resources and all that, the rate of people being able to live prosperous, long, fulfilling lives continues to go up as we have more humans with more ingenuity, and technology continues to build on itself, and emergent systems continue to stack upon each other, which we'll get to more in just a moment. This is objectively a good thing, and especially if you've lived in the last 30 years or so, it has been the fastest decline in poverty globally. This is a wonderful thing. You can just see this complete free fall here from the 1975 or so onwards, with the invention of the computer and the internet and globalization. It's just completely collapsed poverty, and this is obviously a good thing. Now, if that's the case, why do prices go up over time? When you look at any picture from 100 years ago or 50 years ago, basically the price of anything and everything, any good, any service, is more expensive today. Our lives are far more prosperous than they ever have been in history, and yet virtually every market is near an all-time high in terms of its price. Why is this the case? This doesn't make any sense if you really think about it. It's inherently a paradox. And that's because the energy leak in cash and the cash supply is faster than the leak of technology. As technology becomes more abundant and there's more and more goods and more services and more prosperity, the rate of that expansion for everyone is dwarfed by the leak in cash. Basically, the way you can think of this is from an engineering perspective, and we're really going to focus on this today in this video, is that these are open systems. These are two open systems, technology and cash, the goods, services, and commodities that technology brings, as well as the cash, the various fiat currencies of the world. These are two open systems. And so the whole reason that prices go up, despite technology forcing the real cost purchasing power of goods and services to go down, is because cash leaks faster than technology. And why do we do this? Why don't we just have cash track along with technology? Why don't we just have cash be a fixed supply, where we're not increasing the supply of money? Well, the reason we do this is because if we were to tighten, that would cause a credit collapse. If you have a system that's based on credit and debt and yields and getting return on money, you simply can't do that in a world where technology is forcing prices to go down. Because if you have that, then debt gets more expensive over time, and the interest rates cause the whole system to collapse. And governments don't want this, people don't want this, corporations don't want this, nobody wants a credit collapse. And so what we do is we always take the easy way out, and we just print more money, and we basically break the ledger where 1 + 1 no longer equals 2, but 1 + 1 equals 5. We force math not to work in order so we can prevent a credit collapse and have cash leak faster as a system of energy when compared to technology. So a good example of this here, if I'm going to reload it, give me one moment. Here we go. This is the British pound all the way from today back to the year 1209. So we're looking at 800 years of history of the British pound here. And it looks like that the majority of the loss in value here is roughly 500 years ago. And while it's true that this was a massive decline in value, what we failed to realize here at the tail end in the last couple centuries here, even though it looks flat to us, these price declines are even worse than what is visually striking here over to the left. If we were to zoom in, for example, the majority of the collapse happens in this time period here. You can see just this going off a cliff, and you zoom in even more, closer and closer to today, it continues to just fall off a cliff. If you were to zoom in again, you see the same thing again and again, continuing on and on. Every year, every quarter, the value of the pound makes lower lower lows and lower highs, and it continues and perpetual decline towards zero. It doesn't matter how much you zoom in, every year it's just declining at an exponential rate. And the rate of the energy loss, the rate of value lost in the pound is faster than the rate at which technology is adding value. And this disparity here is why prices go up. We are increasing the total supply of money faster than technology brings value to society. And this is why, for example, after the 2008 great financial crisis, we've seen prices go up so dramatically. Here I'm in America, so I'm speaking specifically to an American audience. However, this is the case around the world. House prices have gone up, stocks have gone up like crazy, and when people think about it, it doesn't inherently make sense, because everything is so much cheaper and so much more prosperous than it was just a mere 10, 15 years ago. The rate of change has been so dramatic in technology, and yet prices are near all-time highs. And this is because we tolerate an annual rate of fraud because we like to lie that we can get something for free when we actually can't. We want to shortcut hard work. We want to break the ledger. We want to create money out of thin air, aka value. We want to essentially break the laws of physics in order to get something for free that we don't want. Whether it's in the private or public sector, it doesn't matter. It's the same thing here. And fraud might sound like a harsh word to most people, but that is essentially the double spend problem. If you're aware of computer science, what the double spend problem is, it's basically where you create money out of thin air, or whether it's intentional or unintentional. It's where a system basically has a violation in it. It transforms from a closed system into an open system, essentially. And I know that's paraphrasing that there, but that's essentially what it is, where you have an energy leak within the system. And so this disparity between the collapsing real values of prices due to the exponential nature of technology and the rise of nominal prices due to the rate of inflation, or the rate of debasement in the currency, the denominator of said prices, this is the rate of fraud, or the violation of physics that I'm speaking of here. And so the whole reason for the entirety of human history up to this point, that we invest, that we seek yields on our money, and we want returns on our money, we want to put our dollars to work, we want to make money on top of our money, is to outpace the rate of the money being printed and outpace the rate at which technology forces prices to go down. We are trying to outpace the energy leak that is in our underlying currency. And so systems that are less open than systems that are more open leak energy slower. So for example, stocks do leak, but they leak slower than cash. But still, even though we aren't entirely aware that cash is losing value, that means that the quote-unquote returns and the yields that we get in our stocks and bonds are not near anywhere what we think they are. So if we go, for example, this is the S&P 500 in red since the great financial crisis here in 2008, which is quote-unquote the largest bull run in American history. And over here in this blue line, we have the total assets of the Fed, the ECB, the European Central Bank, and the Bank of Japan all together in blue. You can see a striking correlation here. The S&P 500 is not really increasing in value. All it's doing is it's keeping track with the expansion of the balance sheets of these major central banks. Even though stocks are an open system and have an energy leak because companies can always issue more stock, the reality is that they're keeping up with the loss of energy in the balance sheets of these central banks. And so, say if we compare this, what does this really mean? If you divide the assets of these central banks, which is basically purchasing assets with money created out of thin air, aka printing money, if you divide that by the S&P 500, what you have here is, in this green line up here towards the top, this is what most people think the stock market is. The stock market is this exponential thing that just keeps going up forever. Stocks go up forever, et cetera, et cetera, et cetera. But in reality, what the stock market actually does is it stays flat virtually, and it keeps track with the rate of printing of the currency. And so when we look at stocks in nominal terms, when we think that the dollar is a benchmark of value, we think stocks are increasing in value, when in reality they're not increasing in value. They are just leaking energy slower then the currency is leaking energy. And so then that disparity, that wedge of fraud basically that's occurring, is transferring wealth from the people that are recipients of the money later on to the people that are the first recipients of money. I mean, for example, you can see how even the dot-com bubble here in the stock market here at the turn of the century, stocks haven't even recovered from that in real terms, even though in nominal terms it looks like the dot-com bubble is far, far away from where we are today. And so this is really difficult for people to understand, but basically what we have here is we have stocks acting as a sort of monetized value. We're using stocks as a proxy money because we can't trust our cash, because our cash is leaking value every single year, but we can trust our stocks more because the stocks leak value slower than the cash. So the big question here is, what if we were to figure out a way to create something that had no leak of energy, but instead absorbed energy and then stored it over time and space? No other asset ever in human history has been able to do that. And what if we were able to do that? What if we were find a way to create a system that could store energy over long periods of time, and also was easily transferable over space? This is the big question. And the answer is that if that system were to exist, it basically would change everything. It would be a fundamental shift in technology akin to, say, that of the printing press or the internet or some other major leapfrog of advancement in that regard, because it would be a perfect energy storage system that would be thermodynamically sound, in the same way that cash leaks value as a function of time and it declines. It's not a thermodynamically sound system because we are intentionally manipulating the ledger, and we're intentionally breaking laws of physics here, essentially. And I say that in a metaphorical sense here. And so all other systems, assets, has a half-life, basically. And so, if you can think of these things as being in orbit around Earth, again, to use a physical metaphor, there's a rate at which its value declines. And so eventually, these things are not truly in orbit. They come back down to Earth. But instead, if you were to find a way that could suspend energy, you could basically put something into metaphorical orbit. If there's no decay, it theoretically could continue to survive forever versus something that continues to decline in value forever. And so if you were to create this system, you need baseline units. You need a way to quantify the energy on that system. You need some sort of token or some sort of numeric piece of information or some unit that was underlying that system, which essentially, not only, if you were to create this system, inherently means you not only create a perfect energy storage system, you also, as a direct result, create a perfect money. Because not only is it storing energy as a function of time, but because it's in baseline units, you've basically just created a new form of money. And that money retains its value over time because the energy retains its value over time. And guess what? If you have a form of energy storage, a sort of battery of energy that is decentralized in a way where everyone has access to it in a neutral fashion, apolitical fashion, which also becomes a form of money, then that means, you also have an ideal weapon here, where instead of a weapon of mass destruction, where you attempt to destroy your enemy, instead what you actually do is you exert a brute force physical cost on your enemy, and you can basically weaponize energy and money against them to gain influence over them in a way that is not destructive towards them, but instead constructive towards yourself and your own nation and your own national interests at a faster rate than them. Instead of trying to destroy your enemy faster than they destroy you, you build yourself up faster than your enemy can build themselves up. And so that still creates that power dynamic that gets the end result of what nations want, which is increasing their influence on an international stage, except there are theoretically no casualties there. And creating a system like this, obviously, is very, very, very hard to do, because you have to require it requires some sort of tie or some sort of relation to the real world, because you can't have energy be created out of thin air. Energy is neither created or destroyed, it's only transferred. So you have to find a way to create a system that is tied in with the real world, and also a digital world, aka information, because in reality, there's nothing in the universe that is completely resilient against entropy. And so basically you have to come up with a way to have something that is outside the ways of our outside the constraints of our real world at the same time. You need kind of both sides of this, and they need to merge in a way that is ideal. And also, you need a way for it to be outside of human control, which, up to this point has been seemingly impossible. Pretty much anything humans touch, anything we invent, any system we create, inherently has humans control it. We can try to decentralize it as much as possible. Take the United States government, for example, or the idea of a constitution at all. You're basically trying to decentralize power. But these are still controlled by humans, albeit it's more difficult in a democracy versus a dictatorship to change the rules of a system. But it's still humans at the end of the day. And if you give humans control to manipulate money, they will. And so this whole idea of creating a thermodynamically sound system that stores energy that also be converted into money and a weapon is something that visionaries of the past predicted decades and even over a century ago. In the case of Henry Ford, he was one of the first people that attempted to do this. It's because he understood that eventually humanity would get to the point where we would find a way to create a source code or a ledger, so to speak, of ones and zeros and information that is tied into the natural wealth of the world, basically. And so he attempted to do this, although obviously he failed, but it's one of the amazing things that he and other people like him envisioned in the future. And so to know if we're at that point in future or not, we have to ask ourselves, if we were in that future, what would it look like? If it were to exist, what would it look like? Well, the first thing would be it would have to be a global system that could transfer a brute force physical cost anywhere in the world. Again, like I was referring to before, it needs to have some tie to the real world. The second indicator would be a system on top of that or intertwined with that in some way that can convert that electricity, or aka that brute force physical cost, into information. And a third component of the system would be it would have to transfer said information across space and time. You'd have to be able to transfer it in the world. And you would need a sort of mechanism to convert that energy into those units and into that system that is thermodynamically sound and has a finite supply or a finite cap of units. And so basically these are the four components you need. You need something to transfer energy, something to turn that energy into information, something to transfer that energy across space, and something to retain the value of that information over time where it can't be diluted and it can't have energy leak in the open system. And so basically what you have here is the electric grid. This is the global electric grid. This is computers. What are computers? Your phone, all your phone does is it turns electricity into information. It turns watts into ones and zeros that it displays to you. You have electrical energy via electric wires that is turned into computational energy with computers, in the 40s and 50s here. And then you have the internet that transfers that information that the computers create across space. And then you have a piece of software that takes that information and turns it into a system with a finite scarcity of assets. And that's the basic thing to think about here in this transition. We've basically created a multi-layered emergent system that has these layers to it. And so when you think of Bitcoin, the basic way to think about it is that it's a piece of software that, using the internet, has computers turn electricity, a brute force physical cost, into energy. And this is what makes it different than cash. Cash is issued by decree, and it's issued by the will of a government or the will of an institution, the will of people, same with stocks, same with any other paper asset. Whereas with Bitcoin, it is a self-regulating system that converts electricity into a finite scarcity of its units. And it doesn't matter how much brute force you throw at it, and it doesn't matter what computers convert that brute force, and it doesn't matter where it comes from, but it ends up in the same spot. And so basically the discovery of this system that can convert real energy into the forms of ones and zeros and retain its energy irregardless of intervention from human will or desire, despite increase in energy production, despite the ability of humans to create more energy due to improving technology over time, it is the essence of the discovery here. And so, like I said before, even though cash is a series of ones and zeros, it is entirely different than this because there is no brute force in creating that. And even though it has It runs on computers. It's not encoded by computers. It's simply ones and zeros that are decreed by a centralized party and not something that is emergent of a decentralized system. And so basically, the way to think of it here is that if you were to create such a system, it would be metaphorically like a black hole, and that it is something that is a closed loop and something that has other forms of energy fall into it. For example, if you can create an infinite number of planets, but the end destination is available. You can throw an infinite amount of energy at it, but it will always retain it because it's a finite scarcity of units that are exchangeable for a brute force physical cost. And the amount of brute force is dependent on the value of that system, which we'll get to more in just a moment. And so enter Bitcoin. This is where we start to talk about Bitcoin. And this is the simplest way to put it. This is the simplest way to put the entire Bitcoin thesis here. And basically everything we've been talking about to this point is covering this dynamic here. We have an infinite amount of cash ability to be created out of thin air. We have an infinite amount of land that we're able to discover and improve on and build and create for humanity. We have an infinite amount of intelligence, especially now we're on the cusp of artificially intelligent systems, and the more humans we have and the more robots we have and the more computers we have only more and more information there. And take metals like gold or silver or copper. We're able to mine more and more materials over time and get more materials for our computers and our other systems, orders of magnitude more every single generation and every single iteration. As technology gets better, we find ways to create more metals and goods and service and everything like that. Infinite debt. Nations and corporations, we again are based in a system that requires an expansion of credit, that requires an expansion of cash to prevent credit collapses. And so there's an infinite amount of debt to be borrowed and to be created. And remember, keep in mind, when you create debt, you are creating new money. If person A owes person B money, basically the parties have created money because now you have the original cash and then you have the IOU that has been created out of thin air. The same thing with stocks. If stocks go up in value, a company can issue more stock and create more stock to be injected in the system. Same thing with energy, as I was speaking about earlier. We're able to create more and more energy. Same thing with bonds. We're able to create more bonds, which is another way of thinking about debt. We create more of that over time. We have more and more food, thank God, and starvation goes down, and prosperity and art. Every piece of art is unique, but we create more and more art over time, and basically everything humans can ever create is infinite. And this is the story of human history, that civilization improves, prosperity increases, starvation goes down, and poverty goes down because we are able to create as much of everything we want. And some of these have more benefit than others. Obviously, infinite debt is not nearly as important or beneficial to humanity as having more and more ability to create food and energy. But the point is the same. Everything, good and bad, we're able to make more of, except Bitcoin, because Bitcoin is outside the scope of human intervention because it's regulated by computers. The computers can't suddenly decide to create more out of thin air. We don't have to trust any centralized person or any centralized board or entity to regulate the amount of Bitcoin in the same way we have to trust companies and corporations to regulate the amount of supply of all of these assets. But instead you have computers just verifying each other, the protocol and the system as described here before, a series of computers validating with each other finite scarcity, and basically no matter how much hash you throw at the system, no matter how much energy you throw at the system, it validates that scarcity. And this is the essence of the idea here, that as technology improves, we are only going to have more of everything, and Bitcoin is always going to be finite. So you have an infinite amount of prosperity, an infinite amount of cash, and an infinite amount of credit, and an infinite amount of debt divided by the Bitcoin system, the dominant proof of work consensus mechanism with Nakamoto consensus and difficulty adjustment and all the technical things that make Bitcoin unique. There's only one of them, and there's only 20 million Bitcoins within the system, or 2 quadrillion sats or satoshis, which are the smallest unit of Bitcoin. And so basically what this means is that energy, along with everything else, is going to zero as we have more of everything, and cash is going to zero faster than that. And both of these are going to zero against Bitcoin because there's only a finite number of Bitcoin when there's an infinite infinite amount of everything else. And this number is completely arbitrary. The fact it's finite is the entire point. It doesn't matter if there are 21 million Bitcoin or 210 billion Bitcoin from its initial creation. The important factor is that it's finite, and we've never had a system where we've been able to do that before. And that's the whole innovation here. That's the whole point. And so if we think about this, to give some more practical examples, if we think about cash, in the United States here, the Board of Governors of the Federal Reserve back in March of 2020 announced that there are no reserve requirements for all depository institutions. So if you have cash in a bank account, it might not exist technically, legally, at least for the last couple of years. And that's because we desired to create money out of thin air. We desired to not have our system tied to the physical laws of the universe. We wanted to not have a thermodynamically sound system because it's easier, because we didn't want to deal with the negative consequences of such an event. Or take Social Security and Medicare. These are things that we cannot pay for. We never have been able to pay for, and we justify being able to pay for them because we can create money out of thin air. And this, again, is a violation of a ledger, and it eventually has to come back to roost. Again, the metaphor of an orbit, if you have something that has a rate of decay, any rate of decay above zero, that means it eventually has to come back down to its origin, which would be Earth in the metaphor's case here. And so towards the end of this decade, the 2020s and the early to mid 2030s, we're going to see major problems here as these things that are not attached to the real world eventually have to become attached to the real world again. Same thing with stocks. Companies can dilute their own stocks and create new shares that can be issued onto the market and purchased. Again, this is a violation of thermodynamics and physics in the metaphorical sense, because you're creating value out of thin air, and that's simply not how the world works. You have to exert work, which is why Bitcoin is unique, because it's a proof of work system. Computers give effort and the means of a brute force physical cost, transferring it via computers over the internet into its series of tokens, and we don't want to do the work. We want to create money out of thin air. Speaking of creating money out of thin air, we have here's an example of the U.S. debt clock, and that there's an infinite amount of cash and an infinite amount of debt. If you're to go back in time here, say just to the year 2000, you see the U.S. national debt was roughly $5 trillion. And, if you lurch forward to today, to 2022, it's well over $30 trillion. And this is, the important thing here is that this is not an increase of $26 trillion, but instead this is an increase of 6x. And so, if you continue this math out for any duration of time, the math only gets scarier the farther you go out. So the same thing's true with stocks. The same thing's true with gold. We're always going to be able to discover more gold. Just earlier this year, in July of 2022, we discovered 31 million more tons of gold at least. And this is going to impact the gold market, because when you issue more gold over time, you dilute the supply. You basically have an energy loss in the system, that if you own a bar of gold, that bar of gold is going to lose energy over time, because there's always new issuance coming onto the market. As technology gets better, we find more gold, we are more efficient in refining gold, and eventually we get to ludicrous things, or at least by today's standards, of eventually mining asteroids. People think that, we're just limited to Earth. Well, what happens in the future? Not anywhere in the near future, but basically there's an infinite amount of resources in space, at least infinite in human scale. If we're never going to run out of gold, we're never going to run out of water, we're never going to run out of these things. If the market is demanding these things, we're going to find a way that is economically viable to gain more materials. We can go out to other asteroids or planets or the moon or whatever and get as much as we want, or look inwards to Earth and find more effective ways to refine our resources on Earth. Or take this, for example, humanoid robots. We think that there are labor shortages, and we think that there's a scarcity of labor, where in reality the future that's coming, there's going to be only more and more kinds of labor. There are only going to be more people as the population continues to grow over the coming decades and centuries, and yeah, that might ebb and flow, especially on the region, but there's always going to be more people, there's always going to be more labor. The human population has been exponential for thousands of years now at this point, and the same thing is true with robots. What if, say in a quarter to half a century or so, we're able to have humanoid robots that we can just make tens of millions, hundreds of millions of them, and add them to the workforce. There's an infinite amount of labor that's possible, and we're able to do that because there's an infinite amount of materials to create said robots, and there's an infinite amount of intelligence that can be plugged into those robots, because now not only do we have the intelligence of humans, but we're on the verge of artificial intelligence becoming only more common across the entire world. So there's an infinite amount of intelligence, an infinite amount of labor, and our energy consumption continues towards infinity. We discover more and more ways to create energy, and all these forms of energy become more efficient. We find more raw materials, and this, even though this looks flat over here to the left, it actually continues its exponential trend all the way out for hundreds of years and even millennia. We continue to get better, and this is only going to be dwarfed by a factor of 10, a factor of 50, a factor of 100 in the future. We can't even understand it. In the same way that a civilization that slaughters whales in order to oil their lamps to light their homes can't imagine that everyone would use light bulbs, because to them light bulbs are so expensive and so impractical and so unbelievably energy intensive by their standards. Today we use light bulbs, we leave them on at night, we don't even think about it. And in the same regard, things today that are extremely energy intensive, that seem mind-blowing to us, will become normal and commonplace for people in the future. This is just the way technology works over time. But compare that to Bitcoin, where this red line here is its supply. And so over the first 140 years of its existence, the new issuance of supply will decrease by 50% every 210,000 blocks, roughly 4 years, because every block is 10 minutes long. But basically what we have here is a finite system. It is a closed loop. It retains its supply. It cannot increase no matter how much energy we throw at it, no matter how many computers we throw at it. It is designed to only have 21 million Bitcoin. It's designed to have a finite system. It is a closed system in a world of open systems. And so this sounds insane to say that everything is going to zero against Bitcoin, but the basic metaphor here is to compare oxygen versus the Mona Lisa. This is something that I think is a good metaphor to explain here. Oxygen is the most valuable thing we have. It's more valuable than water. It's more valuable than food. It's more valuable than your house. Obviously without water and food, you're going to die. But without oxygen, you'll be dead in a matter of minutes. It is the most urgent thing that we need all day, every day, even when we are sleeping. But it's free. Nobody charges for oxygen, and the reason it's free is because its supply is infinite. Even though oxygen is the most valuable thing for our survival, it is free, and nobody charges for it because its supply is infinite. Yes, demand is important, but supply is far more important in this example. Where compare it to the Mona Lisa, you don't need it to survive. You're not going to die if you don't see it, if you don't have it beside you every single day. Obviously, this is laughable. Yet everyone pays to see it. I've seen the Mona Lisa myself, and it's amazing. You have this massive horde of people all taking pictures of it, who have all paid exorbitant amounts of money to fly there, or take a train there, or walk there, and pay their entrance ticket, and be able to see it and take a picture of it, or to look at it. Everyone pays to see the Mona Lisa, even though nobody needs it to survive, and yet nobody thinks about the oxygen they're breathing, because we all take it for granted because the supply is infinite. And so if we were to think, for example, of pricing the Mona Lisa in oxygen, its price would trend towards infinity. Say we lived in a world where specific units of oxygen were our form of currency, the price, or the quote-unquote value of the Mona Lisa, would trend towards infinity, because we have an endless amount of the resource. We have an endless amount of the underlying currency, the underlying form of value here. And so basically, again, if you want to think of it from a physics or an engineering perspective, if you divide an open system by a closed system, you get an infinite price. Okay, let me emphasize that again. If you divide an open system by a closed system, you get an infinite price. If you divide the Mona Lisa, where there's only one, a fixed amount of Mona Lisa, versus oxygen, an infinite amount, you get an infinite price. Okay, and so if you divide an infinite amount of cash, an infinite amount of energy, and paper equity, and bonds, and stocks, and everything else, if you divide all these infinite things by a closed system, and specifically a closed system of computers and a proof of work consensus mechanism where it is a finite system and where nothing is created out of thin air, no energy is created or destroyed, it's simply transferred from electrical energy to computational energy into digital energy. That again is a finite system, a closed system. That system's value trends towards infinity. It is incredibly hard for people to understand this, but basically the metaphor clearly here is that Bitcoin is the proverbial Mona Lisa, while everything else is trending towards oxygen over time. Even though we need all this prosperity, we need all these things, when you have an infinite supply, it is just going to increase in abundance over time, and its value in relation to the scarce thing is going to decline forever. And so basically, the way to put it, and why Bitcoin matters for the average person, is that to not own Bitcoin in the future will be like trying to sell your neighbors bottles of oxygen to get by. It's like, yes, they need it, and yes, they need it to live, but it's so abundant, it's so cheap, and there's so much prosperity that you're not going to be able to sell it because the marginal cost of energy has gone to zero, and there's abundant everything. What is there left to sell? Well, you need something that is scarce. You need something that is outside human control. You need something in order. You need something there to be able to price all these things in. And so basically people look backwards and think it's absurd that people will look back and think it's absurd that we'll have a mixed portfolio of consumer goods and equity that goes to zero. In the same way that it sounds absurd of selling oxygen to your neighbor today, it will sound absurd that we used to hold our houses and stocks and companies and all these things as things that would go up and trend up with time, because in this future world, all these things will just go down towards zero over time. And so to give some visual representations of this, this is the U.S. rent market as measured in Bitcoin. It is divided by Bitcoin here. What you see here, this red line, is that the price of rent in the United States is going down against Bitcoin. Bitcoin is forcing the price of rent to go down. Take gold, for example. The same thing here. Bitcoin versus gold. Gold is losing value against Bitcoin. Tesla stock is losing value against Bitcoin. The entire NASDAQ is losing value against Bitcoin. The S&P 500 is bleeding against Bitcoin. And the dollar especially takes the cake because it is the most open system. It is the system easiest to corrupt. It is the system easiest to create new infinite supply of. It is decreasing the fastest against Bitcoin. People think that, Bitcoin's going up and down in price, blah, blah, blah. But in reality, the dollar is bleeding against Bitcoin. And it's continued to for an extremely long period of time. And so another way to think of it is this video representation here. And I give this credit to Bitcoin Times here, but basically what you have is Bitcoin, its constant rate, and everything else, S&P 500 and real estate and gold and all these other currencies here down towards the bottom, they're all depreciating against Bitcoin. You have a finite system here. You have a closed loop of energy, and you have an infinite amount of supply in all these other systems. And so inevitably, their value is going to trend downwards forever. If we skip forward here a little bit, they continue to go down. And the longer you go, the farther they go, because the more and more supply you can create, because these are open systems, versus the single closed system that we have been able to create. And see, what happens is that people are looking from within these systems here outwards towards Bitcoin, and they see this thing that is skyrocketing, and they see volatility in Bitcoin, where reality is the volatility is in all these assets. And that's the distinction that people don't make, and we'll get back to that in just a moment. But basically, people don't understand it yet. People think Bitcoin's energy usage is a bad thing, when hopefully I'm making clear that its usage is a good thing. It is a feature. You need a system that requires energy, and it requires energy input into it for that energy to be stored. It can't create energy out of thin air. It's a feature, not a bug. Energy usage is essential for Bitcoin. Finite supply is essential. If you have an infinite supply, then you have an open system and you have an energy leak in the system. Volatility is inevitable in such a takeover. Again, if we're to compare this, if you're comparing a finite system versus an infinite system, it is always going to be volatile, and the exchange rate is always going to be volatile. It's inherent, because all these things, even though in relation to each other, you don't compare the blue line versus the red line versus the green line, these things aren't as volatile with each other as compared to Bitcoin, because Bitcoin is flat. All these things track with each other, but Bitcoin is in its entirely own league, and so that's why the volatility looks different. It's always going to be that way. Bitcoin will always appear volatile because the system in which we are looking outwards from is inherently volatile. It's also a feature, not a bug, that's outside human control. You can't have humans or a state or a company or a centralized board control this, because if you give humans control, we will corrupt it. Human emotion and a desire for short-term stability will always trump our desire for long-term security. Now, what's going to happen here is that most will have to reset to zero for the new system to emerge, in the same way that the Industrial Revolution, 90% of people were farmers, and then, they all had to leave their jobs on the farm to go into industry and into factories, which was an improvement in their lives. It was safer and more prosperous, and it paid better and everything. The reality is that they had to go to zero first, and they had to learn an entirely new career, an entirely new set of skills, and their entire worldview changed, because you go from being on a farm into a factory. And so the unfortunate reality is that most won't get out in time, and most won't transition until it's already happened. But again, everyone will be better in the new system, whether they realize it or not. And so going up forever sounds insane, because we've never seen a closed system here. And there's a clip we'll get to that manifests that statement pretty well. People think that it's possible to recreate Bitcoin, but this is not. This appears to date not to be possible. There have been thousands of attempts to recreate Bitcoin over the last 40 years. There were dozens of attempts before Bitcoin to make it, and they all failed. They all failed because they were trying to create energy out of thin air, and they weren't obeying the thermodynamic nature of the system that it required. And I'm pretty sure, and it appears to me and most Bitcoiners, that it's impossible to improve, or it's at least very, very difficult to improve. Again, if you're talking about something that is in metaphorical orbit here, where there is no decay within the system or no energy loss within the system, when compared to everything else, I don't know if you can improve upon that much more. If you can get a spacecraft to orbit, I don't know how much better you can improve on it already getting to orbit. It seems that Bitcoin is it, and that we're not going to be able to replicate it. In the same way with the Mona Lisa, if you create a copy of the Mona Lisa, you don't double the supply of Mona Lisas, you simply create an inferior replica that only emphasizes the original beauty and the original uniqueness of the original. And so even if somebody recreated Bitcoin today exactly perfectly, I don't think it could survive. We've seen other examples, Bitcoin Cash, Bitcoin Satoshi Vision, and Litecoin, and all sorts of other attempts to recreate Bitcoin, and they've all failed. They've all crashed 99% against Bitcoin, and it seems that they're not stopping anytime soon. So outside human control, we already referenced that. And so basically, with the double spend problem that I was referring to earlier, and the fraud baked into the system, Bitcoin solves the double spend problem. When fiat is the double spend problem, cash, USD or whatever your local currency is, that is the double spend problem. Well, Bitcoin is the antidote to the double spend problem. These are inherently contradictory systems. Bitcoin solves the problem of creating a system that retains its energy in a thermodynamic sense, that works in a form of energy, a form of money, and a form of weapons, and nothing else succeeds in this. Gold does not succeed in this. Other materials and metals do not succeed in this. Real estate does not succeed in this. And so instead of living in a world akin to today, where you have cash declining faster than the decline of cost of prosperity, and having us chase yield through a mixed basket, a diversified portfolio of investments to catch up, instead, the future world, what it will look like is everyone just has a share in a global computer system of information and energy storage that has finite units, while everything else, all the assets and all everything else we were referring to earlier in these old slides, continue to go to zero forever. And so the old paradigm, aka the current paradigm, is a world where money goes down, okay, the value of money goes down, and the value of assets go up. Stocks seemingly go up forever because the value of money is going down. They're not increasing that much over the money, but it seems that they are in nominal terms because the value of currencies is going down so very much. So instead of living in the world today where the value of money goes down and forces asset prices to go up, which therefore means we hold assets for savings, and we diversify our trust in a mixed basket of assets, and indices of stocks, or a variety of bonds, or however you diversify your portfolio. instead of that old paradigm, we're entering a new paradigm where the money increases in value over time, because instead of having an infinite supply, it's a finite supply, which it's complete opposite in that it forces asset prices to go down, which means instead of diversifying your time and your economic purchasing power across assets, you're holding money for savings instead of holding assets for savings. And instead of having to trust a variety of people, whether they're central bankers or CEOs or regulatory institutions or whatever they are, you can simply verify. You can run your own node, your own miners, and your own computers, and verify the network, and that yes, everything is all transactions are legitimate. There is no double spend problem, and the system is finite. And the more people that do that, the more secure the system becomes, and it's a vicious feedback loop. But basically, this is the transition we're looking at here. Instead of money going down and assets going up forever, we're looking at money going up and assets going down forever. See, this makes perfect sense to people. People say stocks go up forever, real estate goes up forever, all these things go up forever, and the only thing that's changing is that instead of money going down forever and assets going up forever, now we have a system that can create finite supply in which the money goes up and the assets go down forever. And so the basic way to put this in a simple couple sentences here is that infinite money is fighting technology to make assets more finite. You know, we have houses drive off the market. You know, when you have infinite money, you are incentivized to have assets become more finite because it forces prices to go up and preserve credit for as long as possible. Where if you have a finite money, aka Bitcoin, it compounds the rate of technological growth to make infinite assets. And this is really important to understand, because since Bitcoin, if Bitcoin survives everything else going to zero, and it seems that there's no realistic way to destroy it, that means that the rate of technological change is just going to get faster and faster, because as we have a technologically native system that reinforces the rate of technological expansion, it means that the rate of fraud in the old system, in the cash system, where there's an increasing amount of supply, only has to get worse. It means inflation has to get worse. All these things have to get worse over time. And so people will fight it. It will be it will be extremely resisted and tested against society, and it already is. But the important thing to understand and to emphasize here again is that, you know, again, using the black hole metaphor, you can kill a planet by throwing a brute force physical cost at it. You know, say I were to throw an asteroid at a planet at a quarter of the speed of light, you know, I would destroy the planet. It would completely obliterate it. But if you do that to a black hole, it just absorbs your mass and energy. You know, where if you take stocks and bonds and other assets like cash or gold, and you throw energy at it, you can corrupt them. You can, you know, this is the honeypot problem. This is a Cantillon effect. These are all these economic realities that if you throw energy at it, you can eventually distort it to where it's detached from reality. But if you throw hash power at Bitcoin, you try to censor it, you try to stop it, all you're doing is you're throwing more energy at it and you're making it stronger. You know, that's the significance of an open versus a closed system. If you throw energy at an open system, you just make the leak bigger. If you throw energy at a closed system, it just continues to bounce around within that system forever and reinforce the strength and the value and the energy within that system. And understanding that, this difference between open and closed energy and monetary systems, is the great threat and opportunity of this century, in my opinion. And this should be exciting because it means, you know, if all these wonderful indicators of prosperity are going to zero, it means that life will become more prosperous in the future for far cheaper in ways that we can't even fathom. But the reality is that it probably will be brutal. There will be extreme switching costs. You know, again, think of when people went from farmers to industry, or even think of our own lifetimes with the internet. You know, any company that did not adopt the internet died. Any country or any individual that did not adopt the internet has not been able to keep up. There are real switching costs, and that's the whole reason why I'm making this video and talking about it. We'll resist it until the very final moment, and unfortunately that's not going to be a good idea a good idea for most people here. And so a good way to think about it is comparing the locomotive to the horse, and that none of us want the horse because all of our economic interests are in maintaining the horse. We want to see our asset prices go up forever. We don't want to believe that Bitcoin is an existential threat. However, that's the reality. It is an existential threat, and it's coming whether we like it or not. We can try to race our horse against it and pat ourselves on the back and think that, it's just a silly fad that's going to go away, but that's not the reality of what's going on here. Because we have a hard time of understanding new tech. And it's not going to be a competition because, again, if we come back to open versus closed systems, we can't understand how Bitcoin fits within the current system, which is an open system or a series of open systems, because it doesn't fit. It is a closed system. We've not seen anything like it before. To give another metaphor here, this is one I really like, is if you have a bunch of ships with different sizes of leaks, that's basically the world we're in today. You have a diversified portfolio of assets because all these assets have different pros and cons. They have different rates of decay. They have different degrees to which entropy is coming after them and attacking them and eroding them. Again, for example, cash is eroding faster than stocks, and gold erodes slower than, say, bonds, for example. It is easier to increase the supply of cash or bonds versus real estate or stocks or gold, and that's why these assets tend to go up in price against those other assets. But if you have all these ships with leaks, they're all going to sink. They're all going to continue going down. Even if real estate prices go up in terms against the US dollar, the real purchasing power of real estate continues to go down because technology gets better and they become more affordable as our technology becomes more efficient and our availability to use energy becomes more efficient. But if you have one ship among all these ships, if you just have one ship with zero leaks, with zero energy loss, that is thermodynamically sound and is a closed system where there's no water entering the system, that means it is the only ship worth being on. All these 99 ships will, sink at different rates. Maybe some sink in seconds, and others take hours, and others take years. But the end result is the same. They're all going down. They're all going to zero against this one ship. And so once you realize that Bitcoin doesn't fit within the current system, once you realize that this is the only ship worth being on because it's the only finite thing we have, you abandon whichever system you view as inferior, which, in my opinion, are all of these 99 ships. And so, it's important to emphasize here that Bitcoin's adoption rate is 80% faster than the internet. We're already 14 years in. People say, oh, the internet took 30 years, say from 1990 to 2020, and so Bitcoin will probably take 30 years too. And I agree with that, but the problem is we're already 14 years in. Bitcoin's already 14 years old. Its hash rate is near all-time high. Addresses and its distribution are at all-time highs. All the metrics of the network are growing and improving. And the only reason people think it's dead is because they're trading it like a tech stock. They are trading this one ship like the other 99 ships because they don't understand it yet. And if you think about it objectively, it does make no sense. These people are trading Bitcoin like a tech stock, which has a board and it has a marketing plan, it has a product market fit, it has all these things that Bitcoin doesn't have. Bitcoin isn't a stock, it isn't a company, it doesn't have anything to sell you, it doesn't have any yield, it's not trying to make profits, it just is a series of ones and zeros convertible for energy through the proof of work consensus of the system. And so it's absurd to me that people trade Bitcoin like a tech stock, and that's going to be viewed as something completely ludicrous by future generations and future people, because that's basically like selling off trains because stagecoach valuations are down. Stagecoach valuations basically metaphorically here being like tech stocks or things like that, and you're selling off trains because this isn't, it's comparing apples and oranges. It makes absolutely no sense at all. Right now when I film this, Bitcoin's price against the US dollar is down dramatically, and people think, oh, Bitcoin's dead. Every single day, basically, I get comments or questions, why is Bitcoin dying? Why is Bitcoin dead? And the important thing to understand here is that Bitcoin is not declining. It is that the dollar is having an unprecedented rally due to the quantitative tightening from the Federal Reserve, and this is destroying dozens of exchanges. FTX was the most recent one at the time of filming that collapsed. All these things are dying because FTX, as an example, had its own token, the FTT token, and what they did is they created that out of thin air. It was an open system. They had fraud on their books, and what happened is their fraud eventually came back to Earth. They had this imaginary token orbiting around the Earth, but because it had a rate of decay, it eventually came back to its true value, which was zero. And so if we compare that to the dollar here in a similar nature, over here in this very, very bottom right corner, this purple line going up here is Bitcoin's recent price decline, or in this case, it is the rally of the dollar against Bitcoin. An unprecedented quantitative tightening where the Federal Reserve has risen rates at the fastest rate ever in American history. This is all they've been able to do, is just this little increase in the dollar's value against Bitcoin, and people fail to realize how much the dollar has fallen in value against Bitcoin. This is a logarithmic chart comparing sats, aka Satoshis, against that of the dollar. And you can see when you could have traded 2 million Satoshis for a single dollar, now you can barely trade 5,000 Satoshis for a dollar. And so people say, oh, Bitcoin's crashing, blah, blah, blah. But that's because their time horizon is this very last moment here, when if you zoom out, you see clearly the dollar is declining against Bitcoin in the same way that all these other assets are declining against Bitcoin, in the same way that all these assets are declining against Bitcoin. The dollar is declining against Bitcoin, and everyone's scared to buy Bitcoin right now, when in reality it's an excellent time to buy because, look, we're at multi-year highs of the dollar against Bitcoin. So obviously there's always volatility, as with all these other systems, but when you have a finite system versus an infinite system, the trend is clear. And so basically the implications of this are massive. Every model last 4,000 years is done. It's over. The whole idea of getting yield on your money and pursuing returns on your money because your money is degrading and losing energy as a function of time, that this whole mentality that we don't even realize we have is completely over. In the same way that the horse was the dominant transportation system for thousands of years, the locomotive completely obliterates it, and now we don't even think twice about it. Whereas, at the time, it was completely absurd and incredibly difficult for people to wrap their heads around here. In the same way, that narrative is over. Whether we're talking about Sumerian tablets that were able to have the double spend problem and we're an open system, whether we're talking about salt for, say, the Egyptians, or or for ancient Babylon or Persia, or we're talking about bonds or cash for modern systems. These are all open systems, and this era of open systems appears to be ending. And so now appears to be an ideal time because we are buying before companies and nations that transition to the new system and fight over it. And so I encourage you to imagine a world where just a very small number of companies and a very small number of nations begin to realize this dynamic of open versus closed systems, and begin to realize that Bitcoin is truly the only finite asset humanity has ever been able to create. Imagine what would happen if all these companies start buying Bitcoin and hold it for 1,000 years, like, say, MicroStrategy has done, where it's just creating an infinite amount of stock and an infinite amount of fiat currency, an infinite amount of all these other things to buy as much finite Bitcoin as possible. Right now, everyone is scared to buy because the dollar has rallied against Bitcoin this much down here. Everyone's terrified of buying Bitcoin because they don't like seeing the number of political currency units, aka US dollars, going down, when in reality this is comparing stagecoaches to the locomotive. It is completely nonsensical once you understand the nature of these two systems. But people are scared to buy, and my encouragement to you is not to wait until everyone is scared not to buy. You don't want to wait until that's the case. Before we wrap up here, just to give you some idea of how scarce this is, there are 4 million Bitcoin left. There will only ever be 21 million total, but between the 2 million Bitcoin left on exchanges and the 2 million Bitcoin left in mined, there are 4 million Bitcoin left to be claimed ever. What happens when 4 million of the 65 million millionaires in the world want one Bitcoin? Okay. What happens to the other 61 million millionaires? They can't buy any. Okay? What happens when 400 of the 100 million companies in the world, just 400, not 400,000, not 40,000, not 4,000, 400, want 10,000 Bitcoin? Okay, that's all of them. What happens when 4 of the 200 countries in the world decide, you know what? we're going to print as much money as we can. Our currency's dying anyway. We're going to print as much money as we can, and we're going to buy as much Bitcoin as possible, say 1 million Bitcoin. Okay, and what happens when all three of these things happen at once? Okay, remember, Bitcoin is a monetary network, it is an energy network, and it's a weapons system. Okay, and so when you have the individual, the private sector, and the public sector all vying for the same amount of finite units within a closed system, nobody is ready for the implications of this. It is completely unbelievable. And it's important to remember, Bitcoin went from 6 cents per Bitcoin to roughly $70,000 with only a few million users. Okay, what happens when there's 500x the users, all of these people fighting over an ever decreasing amount of supply within the system? This is the difference between an open and closed system that takes months, if not years, to dawn on people of simply how scarce this thing is. I don't emphasize this arbitrarily. I emphasize it to make it perfectly clear that none of us have experienced a closed system with finite supply before. There's nothing on Earth to compare it to. In the same way that a locomotive, there's nothing to compare it to. There's nothing to compare Bitcoin to now. And people say this is cliche and everything like that, and I understand why people think that, but you simply have to understand that new technology is always inconceivable for people that are living in old technology. If all you understand is the horse and the cow and the sheep and the oxen, all you know are muscles that move mass and energy over space. The whole idea of having a non-living mechanical machine move 10 times faster at 1/10 the cost for 10 times longer, it's completely absurd. It makes no sense. And in the same regard here, none of us are ready for this. Bitcoin went from 6 cents to 70,000 with a few million users, and what happens when all these other people, even just marginal numbers of these groups, decide, I need an exposure to this closed system just in case it continues to survive and it continues to take off. So how is this inconceivable to people? If I were to tell you that Bitcoin is going to any given price, $1 million, $5 million, $100 million a coin, people might laugh, and it seems absurd. It seems unbelievable. And the reason for that is because you're comparing two systems that should not be compared. You're pricing a horse in terms of locomotives, or locomotives in terms of horses. It doesn't compute in human brains. The only way to look at it is to detach your understanding of looking at one system through another system. You can't judge one system from within the lens and the confines of a different system, either a more advanced or less advanced system. And so that's why these things seem absurd to people. And so my encouragement to you is, don't value Bitcoin in dollars. Don't think of Bitcoin as being $100 million to $16,000 or $500 or $50,000 or it's you're only making it more difficult on yourself. And I would encourage you to instead think of wealth in terms of energy. Don't think of your wealth in terms of dollars. Think of it in terms of energy, prosperity, time, your standard of living. That's the way to think about energy. And then when you realize that energy is flowing from open to closed systems forever, the flow of energy becomes clear. And then you realize, it is obvious that the one ship that is not sinking is going to absorb all the passengers from all the other ships that are sinking. It is an inevitable result. And so this intrinsic bias towards the existing paradigm is exactly what makes it so difficult and unbelievable for people to explain. It's precisely why videos like this have to be so long, because it's incredibly difficult for people to understand this. You have to put it in so many different metaphors and make it as simple as possible for people. And so I want to share a brief clip here between two Bitcoiners and one news anchor here, where they're trying to explain this, and it's simply not getting through. So I encourage you to watch a short clip here.
But you can't increase the supply of Bitcoin. So if you look at the world currencies, they're inflating at 10% or more a year for the past 30 years, maybe as much as 14% a year. You can expect they'll keep inflating for the next 30 years. And so Bitcoin measured in currencies of the world and in currency derivatives is just going to keep going up with volatility, albeit.
Sure, but forever, Samson, nothing goes up forever. you have a fixed supply of gold as well. I mean, this sounds like something someone might say at the peak, you could argue.
Gold is not fixed, Deirdre, right? Gold is increasing in supply at 2% a year in the physical regime, and bankers can rehypothecate gold, and they can print 100 ounces of paper gold for every real ounce of gold. And so Bitcoin is the dominant digital monetary network, and because it's dominant and because it's fixed, it means that it's the most reliable, highest integrity, scarcest thing in the financial universe.
It's going up.
Does it go up forever, Deirdre? I'm stuck on this point. I want to hear both of you say or not say that it's going to go up forever. Samson, go ahead.
It's going up forever, Deirdre. Forever.
I mean, Michael, do you agree with that? You're going to stand behind that comment? Going up forever?
Bitcoin is going up forever, Deirdre.
Forever. Guys, come on. This sounds like something someone would say at the peak, no? I mean, Michael, didn't you say before it would hit 5 million? 5 million's not infinity.
Deirdre, in Argentina, the dollar used to trade at $1 per peso. And now the dollar is approaching 200 pesos. The dollar is going up forever against the peso. The dollar's gone up forever against the Venezuelan bolivar. So a strong asset is going to go up against a weak asset forever. And since we know that nobody in the universe can create any more Bitcoin, and since we know that every political nation state is going to create more currency, it isn't really that much of a stretch to say that measured in the currencies of nation states, Bitcoin is just going to continue to appreciate.
And that's the essence of the argument here. And so if you understand this, which you may not yet, but if you do understand this dynamic, you're roughly the first per 1,000 people on Earth to understand it. And my warning or my encouragement to you is to educate as many people as you can, as quickly as you can, because by the time it reaches about 5 to 20% of the population to understand this and begin selling off their infinite assets in exchange for this finite asset, that's probably going to rip open the tear in the system. Again, think of it like a sinking ship. If you have this high percentage of people that are leaving the system, that causes a collapse in demand enough that it basically causes the whole thing to fall apart. I mean, think about the bond market, think about stocks, think about cash. All these things are reliant on trust. The United States has a system reliant on fiduciary trust. And so if you have even percentages this small of 5% or 10%, or at least what seems small to us, that could be enough to then have us immediately have a capitulation event where everyone defaults to the next reserve system. And so my encouragement to you is that most people will never own more than 50,000 sats in their lifetime. And I'm not going to go into the math of how we can determine that now, but basically when you divide when you take the total number of bitcoins and you subtract lost bitcoins, you subtract bitcoins that are already claimed for and everything else, basically the average person probably will own roughly 50,000 sats, maybe more, maybe less, in their entire lifetime's worth of earning. Okay, and today I'm filming this in the year of 2022. Bitcoin's price is $16,000 roughly. It fluctuates, of course, but 50,000 sats is $8 today. And so you don't have to fully understand Bitcoin, but my encouragement is, at the very least, just get a little bit. Just get something. Just don't stay on zero. So if you do understand it, and you do understand this dynamic here that has just been explained here, I encourage you to buy like crazy to make money. You'll make a lot of money if you understand what you're buying here, and you hold it forever, and you have proper security, and you control your own keys. If you do this right, you can make a lot of money. You can get rich. But the important thing, the far more important thing, is to share the message with others, because you want to warn them, you care about them, and you want to help them lower their risk, because they have a diversified portfolio of assets that supply is trending towards infinity, and therefore their price or the exchange rate is going to continue to trend towards zero. And that's why I make this video personally, to see your own family, church, and anyone possible to get off zero. The more people and the more individuals that can get off zero before governments and larger institutions can get involved, the more distributed the network will be, the higher the higher security of the network will be, and the more equitable it will be for everyone. Basically, when it comes down to it, I just want to see the transition costs be as painless as possible. And so, as you think about terms of risk, I encourage you to think of it as a form of insurance policy, and that basically, if you think of Bitcoin as fire insurance, as you divert capital away from open systems into this closed system, what you're basically doing is you're pouring kerosene on the house when you buy it. When you move energy, when you move economic energy away from open systems and into the closed system, away from the metaphorical planets and into the black hole, what you're doing is you're increasing the systemic risk of the system that's left. You're increasing the probability of default in bonds. And so basically, the more Bitcoin you buy, the lower you put yourself at risk, because you're taking risk off the table. You're moving capital out of an open system that's going to degrade as a function of time, and you're moving it into a system that is closed and thermodynamically sound. But as you do that, you put greater risk on everything else. So let's say, for example, you move 1% of your capital over to Bitcoin. All you've done now is, yes, you've decreased your total portfolio risk, but you've increased the risk of the remaining 99% of your portfolio. The decreasing risk of this 1% allocation outpaces the increased risk of this 99%, but you quickly realize that there's no reason to stop at just 1%, because all you're doing is increasing your risk. As you buy fire insurance, you're pouring kerosene on the fundamental risks of everything else you own. And this is why it will win. This is horribly misunderstood by people today. This is basically the realization that causes people to take very large percentage allocations of Bitcoin. I, at one point obviously had a 0% allocation to Bitcoin, and now today's a far higher allocation, and I hope for that allocation to only go up over time. And so this is why Bitcoin will win. It's in everyone's self-interest. The best way to decrease your risk against artificial intelligence and infinite amounts of energy and infinite amounts of gold being mined and infinite inflation and all these other factors, the best way for you to protect yourself is to allocate at least some percentage of your assets to a finite system. Everyone needs to preserve purchasing power in a monetary sense. Every company needs to arbitrage energy from a viewpoint of storing energy, but in both terms of electricity and capital. And every nation needs to have a brute force physical cost on other nations as a matter of national security, as a matter for their political and economic interests, as a form of weapon. Bitcoin is all three of these. All three of these systems reinforce each other in a constant feedback loop. It is perfect game theory. And so my 5 practical steps I encourage you to take is, first, to get off zero. Again, even if you're just buying a few dollars worth, buy $10 worth, $50 worth, $100 worth, whatever you can, just get off zero, enough to at least protect yourself and to take an interest in starting to learn more. And make sure that you're storing your Bitcoin properly and not in a place that is high risk. All it takes is a few large entities to get enough leverage to start transitioning. All it takes is a few more companies or a few countries to really get going and issuing infinite amount of stock, infinite amount of bonds, infinite amount of cash, and suck up the remaining Bitcoin on the market, like I was discussing earlier. And then my second encouragement, to start thinking about this as soon as possible. Watch this video, take a look at what these folks like Michael Saylor, Samson Mow, or the hundreds of other Bitcoiners online have to say about this, and you can get really deep into the technical aspects of the system and understanding why everything that I'm describing here is the case. My encouragement is, don't be in the last 80% to start thinking, as you'll have to start anew in the new system. Again, think of the farmer to industry metaphor here. If you're a farmer that is in the early days moving away from farming into industry, you're going to have a lot easier time than the vast majority of people that wait until the very last second to move over. They are going to have the most challenges to face as they transition. And so my third encouragement would be, over time, once you've gotten zero, once you continue to increase your understanding of the system transition here, that you eventually only own assets as a strategy to acquire more Bitcoin. And that sounds strange to people today, but that's basically what we're looking at here. Instead of the current world where you acquire as much cash as possible for the end goal of acquiring as many assets as possible, now we're transitioning to the world where the only reason to own assets is to increase the amount of money you have, or to hedge against Bitcoin on the probability of an incorrect assumption. So, and then also over time, increase your security, continue to remove your Bitcoin, other assets from exchanges, and just improve your general understanding of the topics. The fourth and perhaps the most important step, besides getting off zero, is to train your brain to transition to the new paradigm. Whenever we have new technology or new ways of thinking, brains take dozens, hundreds, even thousands of hours of training to think in the new framework of the new model, of the new system. Thinking of the world through the lens of the horse versus the lens of the locomotive are two entirely different worlds here. And so, if you focus on signal within the noise, you focus on what Bitcoin is doing and how Bitcoin is transforming technology and how technology is transforming the world, you can cut through the noise of news headlines and articles and media and fear and doubt and all these scary things that is just trying to get your attention as the system continues to decline. Political polarization will go up, economic instability will increase, and chaos unfortunately will continue as the system degrades. The remaining powers within the current system will become more desperate to retain what diminishing influence they have left. It will almost certainly only get worse until the new system has superseded. Again, think of horses versus locomotives. As the locomotive begins to take economic precedence, all the incumbents, all the remaining powers of the horse, all the titans of industry in this dying industry are going to become more desperate and more reckless and more eager to get your attention and cause noise in the signal that is simply that the train is coming and it's causing a revolution. So I encourage you to just transition your brain to the new paradigm, and keep in mind Bitcoin will always be volatile. It's always going to alternate between ripping upwards and price spikes that will melt most people's faces off, and then crashing downwards forever that cause massive amounts of depression and pain in people. This is pretty much how it's exactly going to go. The idea of Bitcoin being a stable system that's going to be, or stable in terms of prices, that's going to be consistent with all these other assets is simply not going to work, because all these other assets are all components of a system that is open versus a closed system. And again, as I was speaking earlier, these inherently are going to be different. And so hearing the noise, the technological, hearing the signal of the shift that is Bitcoin cuts through the noise of the dying system. And so that's my biggest encouragement. Once you understand this, 95% of all the noise and all the chaos in the current world just fades away, because it makes so much more sense of what's really going on here. And then my fifth step is just to be thankful. A lot of people have regret that they didn't buy Bitcoin earlier, or it becomes clear to them that they should have been thinking about this critically earlier. And my encouragement is, be patient, it's okay, and be thankful it takes time for people to understand. We want this transition to take a long period of time, but I know realistically it probably won't, but that's what I would prefer, even though that's probably not what's going to happen. It gives us as much time as possible before big players get involved and before Bitcoin gets on a major rally here. I'm happy, frankly, that Bitcoin is down in price and that it's not very popular right now. It gives me time to buy as much as possible. It gives me as much time as possible to warn people and encourage people to start learning about this. So at the end of the day, I encourage you, please get off zero for yourself and for your family. Share these ideas, share this video with your loved ones or others if that's making sense to you. If you have ideas on how I can improve my articulation of this or my explanation of these ideas, please comment down below. I know it's inherently always going to be difficult for people to understand this, but it really would help, and I really would appreciate constructive criticism here. So anyway, the best way to think about it is that this horse is our current system. This is our current paradigm of creating as much cash as possible to chase as many assets as possible, and basically leave one ship that's sinking quickly for an alternate ship that's sinking a little slower. And we think we're doing a good job because our horses are stronger or faster, or they're better looking, or whatever metric we value our horse by. We think that our system works all right. We think that we get around fast enough, and that the world is sufficient. But the whole idea of Bitcoin here is that there is another system coming here, that if you're thinking within the horse, you aren't ready for the locomotive that's coming for it, and it's not even going to be a fight. You have this system of bonds and stocks and credit and debt and cash, and the world that we understand today, where we have a variety of open systems, and we diversify ourselves among these open systems. And now we have instead this closed system that is Bitcoin, and it's not even going to be a competition. It is there's nothing yet in human history to compare it to, this mechanical energy in comparison to this biological energy. And my encouragement is that you get off zero and understand that whether you like it or not, this is coming. Whether you like it or not, technology is just going to get faster. And the best way to prepare for it, the best way to prepare for an infinite world, is to buy some portion of a finite money that infinite world will be priced into. So please share this video with others, and as soon as possible, get off zero.